All right, it is April 17th, 2024. And the market is getting beat up today, which is actually a good thing, um, believe it or not. Uh, pulls like this are quite normal. And we've needed one for a while and we're getting it. Don't forget the overall theme is bullish for the year, and so I think this is going to be an opportunity to start getting long. With that being said, I wanted to train on a couple edges. One of which is the second day play. Um, has anybody ever heard me talk about the second day play before? Basically, the idea is, let me pull this up here. So what you're doing with the second day play is you're saying some event happened that caused a pop or a drop and abnormal volume. Um, and on these second day plays, what it allows you to do is mainly use that volume profile for that. Now, this is something that I have for my summary, but I'm going to kind of summarize this up as easily as possible, and I can share both of these with you guys. All right, so one, must have a high volume day, minimum, 2x RVOL, right? This often comes from earnings, data, PR, etc. All right. Two, once the day closes that has high volume from an event, break down the VP and try to find where large institutions may be entering or exiting positions. Okay. Any questions so far on this? And we'll do this with one today. Three, use technical analysis to find any type of chart patterns that could play out. This is like inverted head and shoulders, ascending triangle, blah, 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 right? If you can see anything that is possibly forming, then, you want to be aware of that and try to play that out. Four, develop an over under level. Yeah, relative volume, Derek. All right. Develop an over under level. This just means that if we get under the long is broken, and vice versa. This is just another way of saying find out when the chart breaks, right? Now, here, let's role play this out. So one that I was playing today was UNH. So does UNH fit a high volume day? Well, yeah. I mean, we had earnings yesterday, right? So here, let me switch it to this. So we did 11.8 mil, and the average volume was 4.8, right? So obviously, high volume day. Check, check, check. So the next step would have been break down the VP and try to find where large institutions are buying. So if you didn't know, institutions buy over days. They don't just buy, let me buy 1 million shares today, right? I mean, I'm sure they can, but point being is they usually buy over days. And just kind of a tidbit here, if it's bad earnings and you have a gap down, a lot of them have a 3-day rule where you have to wait 3 days before you can start buying it up. But anyway, so we're going to break down this candle without today's candle. So I'm just going to go to a 1 minute chart here. And take away today's candle. Actually, what I'm going to do is I'm going to try to zoom. See if I can zoom to this. It'll give me the best detail. Okay, there we go. There's our VP, right? And I'm actually going to just put this big area in, and then we will zoom in a little bit closer by taking this top part out. So if I were drawing this would be the VPVR range, and I'd say this is your point of control, this is your value area high, this is your value area low. You know, this is a zone that I'd be comfortable buying in. Here is a resistance level if we're below, and you got a little bit here as well. But I think if you can get over this level, you can have some room to run, right? And let's undo the zoom, and I'm gonna rezoom this again, but I'm gonna take out the first minute candle to tighten it up just a little bit. Yeah, it still matches up. So to actually see that detail, you need to, so in reality, it'd be a little bit higher. Okay. So now what you would do, whoops. Take this out. You'd come over here and you'd make a trade plan accordingly, right? You'd say, okay, we've got our lines, we've got where institutions are going to be buying, most likely, where the volume was mainly acquired, right? So the question becomes, where do you feel comfortable buying? Where do you want to stop out? And for me, it's like, if I'm above the point of control, right, which is right here, this big thick line, like if we, you have to create these if-then statements. If we open flat and push up, I'm willing to buy above this point of control, for sure. What if we gap down? Well, if we gap down to here, I'd be willing to buy and take it back to point of control. And then I would play that over under, right? Sell 50% of the position, blah, blah, blah. Well, what if we gap up? Well, if we gap up, I would definitely be buying a pullback into point of control. Okay, that's kind of how I would uh, break it out. Now, where's the chart broken? Well, it depends on where we open. If we open flat right here, I don't want to be below the value area low, so I would stop out if I was trying to get long and we got one below. If I was going to be shorting, it would be the value area high, right? So then we wake up in the morning and all of a sudden you can see what happened this morning. Man, we shot up a ton. So now we have to kind of adjust our plan, right? So we're opening up above the highest level. Well, yeah, no, we did. So open prep price was there. So this was pre-market. Okay. So what you have to do here is you have to say, all right, am I willing to buy a breakout above this level? Right? This was your last level of defense. Remember, we have a lot of room up here. I did. I bought this morning. I bought this breakout. Normally, I would be buying a couple thousand shares to 2, 3, 4, 5,000 shares of this. But today, I bought a massive 250 shares of this. Right? So just realize where we are in the market. I'm playing about 1/10 size that I normally play. Now, we got this nice push away, and remember, because the only thing we're really paying attention to is the previous day, then, whoops, once we break this technical high right here, right, it's you're going to get you should get a flood of buyers, which we did. Now, once you start breaking out of these levels, it is important to start looking back to say, hey, what's the next levels overall on the chart, right? So you'd want to break these down, et cetera, et cetera. Same thing I always talk to you guys about having zone 1, 2, and 3. You want to know above and below. The key to this one on the second day play is, did it give us another opportunity to get in? Yeah, it did. So this is what you have to decide as a trader, is you have to say, hey, my risk profile again is here at 469.25, right? So let's just say 469. Am I willing to start buying at 476? Right? If the answer to that is no, that's too wide, then wait until it comes to the value area high. Well, in that case, you would have missed this particular one. So you have to decide your risk reward parameters. For me, once we break above this point of control and we start pushing, I don't want to come back down to value area low. My stop out would be the point of control 90% of the time. Like, we already broke, and if we start breaking down the point of control, that's a failed breakout to me, and a lot of times you're going to need to break the lows, right? So my absorption area then changes from what was going to be this area, right, from the previous day, and I shift it up now. It comes into this area. So my goal is to absorb from 476.88 down to 471.14, this point of control. And again, I break this up into a minimum of 3 buys. And that's it. This is the second day play. And it works for shorts, for longs, whatever you want to trade, it works. All right, let me catch up on chat if there's any questions. You guys have any questions?